In this video, I want to talk about a compelling opportunity in the proprietary data space for AI, and that company is John Wiley & Sons, ticker symbol WLY. And this is a company that is strategically positioned in data for AI, so licensing out their data for training for AI models and things like that. And to get into the thesis here, and real quick before we begin, I do hold a position in this stock. It is not financial advice, only for entertainment. And the single sentence is this on this stock. So Wiley owns peer-reviewed scientific content that AI cannot generate. So they own the rights to a large collection of academic research, and it's something that others cannot easily replicate, and it's something that AI models need on an ongoing basis because this research goes out of date, right? And there's constantly a new flood of new peer-reviewed research, and the market is pricing it at an extremely cheap valuation, around 7x EV over EBITDA. And it's largely because of a small subset of their revenue is a textbook company that has been on the decline. But this thesis is all about their new AI revenue segment that is largely increasing, and will look to multiple expand the revenue of this stock. So every comparable data business trades at something like 13 to 25x, and Wiley looks undervalued right now based on that multiple of 7x EV over EBITDA. So this company is a 200-year-old academic and professional publisher, and they own about 2,500 peer-reviewed scientific journals and over 8,000 book titles across research and professional disciplines. So it could be something in science or chemistry or anything like that. And they kind of generate revenue through these journal subscriptions to universities and other people that need to consume this research. And the authors are paid across the publication. There is AI content licensing, and they also have their professional learning products in their learning segment, like I hinted at before. But basically, the entirety of this thesis kind of is playing on the back of proprietary data and how it's becoming increasingly important for AI models. So from the recent Oracle earnings call, many enterprises were highlighted at using rich operations data to make their AI better. So they basically called out that AI compounds the benefits of AI, or rather data compounds the benefits of AI exponentially. And Wiley is one of those companies that has data that will make AI better. So this collection of journals was collected through a slow, expensive, but validated process that no other company can just start up and generate a whole bunch of scientific peer-reviewed academic journals. And this is a data set that is legally protected under IP law. They are having some legal matters about protecting their rights, but this is a data set that has compounding value as AI kind of grows, and more frontier model companies are paying for training data. And they already are making real revenue licensing this data set to AI companies, and increasingly becoming recurring revenue rather than just lumpy one-time revenue on a training basis. So from a 30,000 foot view, the business does have the two segments they call research and learning. The bigger segment, research, and what we are particularly interested in is the AI part of the research segment, which has the journals, the open access publishing, AI licensing, research tools. A lot of this is digital, and this is your whole asset. And then the smaller part of the segment is learning. So you have the textbooks, the professional books, digital courseware, and obviously this is facing headwinds, right? It's a segment where students are increasingly not paying for textbooks the way they maybe once were. A lot of competition, low barrier to entry, things like that. But where it gets really interesting for this company is the AI model training licensing. So they have signed deals with at least 3 of the world's largest AI companies, including Anthropic, and their revenue has gone from 23 million to 40 million and tracking up to 50 million for this fiscal year. They have a subscription knowledge feed. So big companies in pharma and all these industries that are building these AI tools need to keep their AI models up to date on the latest peer-reviewed research. So it's not hallucinating. It's not, outputting something for certain that was maybe happened years ago. And so Wiley is actively signing these customers on these recurring subscriptions, which increases the value of that revenue, right? And some of the current customers on this segment include companies like European Space Agency, Novartis, Regeneron, and management, not on this previous earnings call, but the one maybe before that, they have said that they had 10 corporate customers and the recurring AI revenue will triple. So getting into a few other partnerships and acquisitions on what makes this company interesting. One of them being the IQVIA partnership, which is, so basically when you're doing a clinical trial, you have what are clinical outcome assessments, COAs, and these are questionnaires that are regulated and approved and required by the FDA to prove a drug actually works for some of these other conditions that maybe are not quantitative in nature, things like pain, depression, fatigue. And Wiley owns the rights to these instruments that are used to basically validate that these drugs work. And so no AI model can kind of just come in and acquire the rights to distribute these tests. And so IQVIA is now bundling Wiley's COA instruments into their clinical trial packages as a solution for every major pharma company. So this is a small revenue segment, but there's great potential in this segment because they own a data set, which is the COAs, and can license that out freely through the distribution of IQVIA, which is a large company. And then the final thing that really shows that they're putting their money where their mouth is when it comes to AI is the Emerald acquisition that happened earlier this month. So they basically acquired Emerald Publishing, and they just purely did it to expand their database and their data collection of more journals. So they had a few subjects that they felt they didn't have the whole collection. And so requiring more journals expands their data set and makes it more valuable, up to taking the total journal portfolio up to 2,500 titles. They previously were heavily weighted towards sciences, and Emerald gives them that corporate, basically content base more towards business and economics research. And a large part of Emerald is recurring subscription revenue, and they're going to have a lot of synergies there to save on expenses and increase that revenue going forward. And that was a large acquisition, $452 million. And it'll be something to kind of monitor going forward if they're able to execute on that part. So getting into the valuation more about this stock, they are a company trading at 11 times PE, forward PE of 9. Like I said, EV over EBITDA is 7, price to free cash flow 11. So you can see I like using FinViz, and all of those metrics are green there in terms of valuation. And they are a company that has done buybacks in the past, which I imagine will kind of slow down here as they take on more debt and they need to service that debt for Emerald and stuff like that. But it's a compelling case with kind of a high ceiling in my view. I've done some chatting with Claude, and just through my research, I see maybe a bear case price at $40 a share, and I don't really like to buy a stock if it can't 2x. So maybe a base target I would like to see is a 2x on this company. And the big part of this that also comes in is the previous earnings call. So if you look at the chart on the day of the earnings call, previous earnings, June 16th, it opened on the report, it got down as low as $40 a share. And as the management was speaking on the call, that pushed it up to about $45 a share. And now it's trading even higher at $48. So people were very enthusiastic about what they were hearing on the call. Personally, for me, it was very thesis validating, and I had Claude kind of go through all of the parts of the thesis and based on the call, say if that part of the thesis is validated or not. So I encourage you to go listen to the call, but basically on 7.5 out of 8, according to Claude, parts of the thesis are fully validated by the recent earnings call. One of them being the core research business is durable and growing. Research revenue is up a little bit. All those things are good. The research business is not just holding or staying flat, it's taking share. And that's what you want to see. You don't want to see that learning business kind of really, you don't want to see the research business shrink or anything like that, because that's going to hold the AI part of it. And the second pillar was AI recurring revenue is the metric that matters, and it's inflecting. So they are ahead of schedule on their AI revenue forecast. And this is pretty much the most important number from the entire call, is that their guidance is about 2 to 3x of 8 million of what they previously reported. So I will add all this to the doc and maybe add it to the description, but it really goes to show that they are really prioritizing this AI segment, and they see a lot of potential in it, not only with the Emerald acquisition, but everything they reiterate on the call. And so this is a compelling opportunity in the data space, in the proprietary academic research space. And I would love to hear your thoughts and any suggestions. And in the description below, I have a link to investorways.com, which is a free daily email newsletter. You can go and put in and get all of those updates from myself, my journey on trading and investing. So let me know what you think in the comments, and I'll see you in the next one.